everyone, please welcome Isabella and her colleagues on the future of Fintech. Let's give them a big hand. Please keep signing out.
So thank you everybody for staying here for the last panel, and bear with us because I'm sure they're going to say many, many interesting things and very different opinions about fintech. So to start with, we're going to start talking about something we already discussed a little bit in this 2 days forum. So this is about what is fintech today. Do you believe this is a revolution or evolution? I think most of us are going to accept the fact that we started talking about revolution, but this revolution in terms of getting market shares for big banks or for big financial institutions has not happened yet. So in your opinion, is there any player that really has the capacity to do a revolution in this area? Or is the whole future being about evolution cooperation? What do you think about it? I think David can start.
Yeah, I'm ready to start. Evolution. So there will be no revolution. There is evolution and there will be evolution. So it will be going on. I don't see any one player which can really disrupt the scene. If I have to list four in the European American scene, I would say GAFA, so I agree János, Google, Apple, Facebook, Amazon, especially Apple. I think one day they are going to tap into financial services very seriously. Now they are not very serious, they are only doing Apple Pay. Apple Pay is a big thing, but compared to the total size of Apple, it's nothing. But Apple has $250 billion excess liquidity on its balance sheet, which it cannot repatriate to the USA because of tax reasons, mostly. Obviously one wants to invest that money somehow. So nowadays they are trying to buy some things like earphone companies and blah blah blah, but you cannot spend $250 billion on earphone companies, so you have to do something much more capital intensive, and I know a very capital intensive industry, and it's called banking. You see? So Apple Bank will appear quite soon, and it will be built around the concepts of Steve Jobs. But even that will only be evolution. Because if you go through the numbers, if you really do the math, it turns out that if Apple invests all its excess liquidity into banking, and after that it grows exponentially, even in that case, after 5 years of exponential growth, it could only occupy about maximum 1% of the total assets of the global banking system. You see?
Maybe just, I fully agree with you, and I think that technology giants are the real threat for the banking industry and for the financial industry in general. Depending on the domain, there might be some revolution or some evolution. When we look at the fund industry, we were talking mainly about banking, but fintech is also about investment fund industry. When I talk to those players, to those large companies active in that domain, they all tell me blockchain is a disintermediation technology. We are an intermediary. We might disappear. So all settlement houses, all clearing houses are really afraid of that. And it might be kind of a revolution in that specific industry. Same for banking. For banking, I would say, what is banking? And Bill Gates said close to 20 years ago, we don't need banks, we need banking services. And when you see all those fintechs, what they are bringing are banking services. They don't pretend to be banks, they pretend to bring banking services. And 2 months ago, I was talking to the chairman of a large French bank, and he told me, okay, the risk for us that we might become, French retail bank, is that we might become just kind of a depository bank, just managing deposits. Because payments will be elsewhere, because loans will be elsewhere, credits and so ever. So what will be left will be deposits. How do you make money on deposits? And so it's more a revolution on the business model, on the usage, maybe not on the names of the players. A lot of them will disappear. And following the 2 financial crises, and especially the last one, a lot of banks have disappeared or have been acquired. And when you take a look to the 50 top banks, only 10 are left, or maybe it's 8. I don't remember exactly the figure, but there will be a few that will be left, that will be bigger, stronger, and those will be the ones that are the best prepared. And then you will have companies such as technology companies in Asia or in Western countries that will bring some specific services, partnering with banks or competing with banks. This is really the way I see it. So it's a mix of evolution and revolution.
In my opinion, I disagree a little bit, because one of the good things about financial sector is that we have the history in other sectors. So we have seen what happens in telecommunication, we have happened in media, and probably finance is the last sector that is being disrupted. If you don't consider really like PayPal disrupted the financial sector, that I think there has been some disruption. About that, I will see. So in my opinion, fintech will have a very more share of the financial sector. And one concept that is important in here is I think we are very used to think in a linear way. We know better how to business growth in a linear way. We know very well how one branch goes to 100 brands, how the time when we have to pass the capital. But for us, it's sometimes difficult to think in an exponential way. And I think we are right now, the fintech companies really think in an exponential way. And I think that explains what happens Uber, Airbnb. And we have a fintech fund that invests in fintech, and we usually try to know what is the degree of exponential. And when we think about exponential, this kind of growth is very slow at the beginning. So you can pass 1 year, 2 years without growing not too much. But at an anchor point, the growth is exponential. That happens with Facebook, with Airbnb, and other. So my real point is, I think we are underestimating right now what is fintech, because it's very difficult really to understand what is exponential growth. And I think it will happen. So probably we will see that fintech will really try to get out of clients for all over the world. So we are thinking globally right now. So I think that's the opportunity. But I think, as we don't know, or it's very difficult to really predict growth like Airbnb, like we really underestimating really this growth. So for me, we really are going to grow a lot. I think banks really are taking care, protecting really their position, but I think they don't understand the opportunity that the way you think fintech growth is about getting clients. I think one bank can really attract a lot of clients, and I think for me, really, the difference between fintech and bank is they think in an exponential way, and I think that will happen and will be disrupted, this media. This is my opinion.
I think, thank you all for your opinions, are very, very interesting. So, but I think all of you think that it's mostly evolutionary, not revolutionary, but today we're seeing in Yano's presentation, for example, an example of China. So we have massive players there that have a very huge number of users. Alibaba, Tencent, and Baidu are the key examples. Do you believe that such players are really, revolutionizing the industry there? So revolution is already happening in a specific geography. And could this go to other geographies? And going beyond that, if we have this exponential growth of fintech, do you believe that the role of banks could fundamentally change? So banks would become compliance providers, data infrastructure providers, but not the front end, because clearly you're not very good generally at maintaining relationships with clients.
Well, I think one of the major problems of the financial industry is that there are legacy systems, which is less the case in China, and which is less the case for new entrants that have very large capabilities in terms of very large number of consumers that also know how to sell products, because banks are not able to sell new products. We have seen that in several countries. They are trying to sell new products. Some are selling some cars, some mobile phones. Some banks don't know how to sell products. When you go to large retailers, online e-commerce website, they know how to sell products. Go in a supermarket, you go for a brick of milk, and you go out with plenty of stuff in your basket. They know how to sell products. Financial institutions don't. So this is one of the major points. So the other one is really about the legacy systems. Banks, especially Western ones, but also in Asia, and especially in the most developed countries, such as South Korea or Japan or some others, have systems that are running for decades, 30 years, 40 years, 50 years, 60 years, that have evolved a lot from the core system. They built a lot of stuff. How can you evolve on that, knowing that there are new technologies that are just a few years old? How can you plug them? And this is the main issue for them, because in my job, what I mainly do is introducing startups to financial institutions or large organizations. And those large corporates are always very interested by the product. And they start working with them. And then comes the CIO, or the IT project manager, release manager. Oh yeah, maybe we can put it in a release, maybe next year or the year after, if we cannot make it. Just because the implementation, the integration is very heavy. And this is the primary thing that has to be changed for financial institutions, is to rethink their infrastructure, their architecture, functional architecture, not like, okay, I want to implement this and this and this, but more like Android and iOS have done. You want to download an app, I don't have to update my full mobile OS. I just download the app if I want to use it. For a bank, it should be, or any organization should be the same. Oh, I want to work with that company. Oh, Payget looks very great. I want it. I should just kind of download it and provide it to my clients. This is not the case today.
So, for a long time, banks have. When I look at kind of my colleagues' experience of payments and banks over the last, say, 15 years, we've thought of them as being kind of very slow, large organizations. And we've sometimes even compared them to MNOs as well, mobile operators, also very large organizations. Quite difficult, they find it quite difficult to innovate. And they've got such a big existing business case, it's hard for them to pay attention to very small things that happen. But over the last couple of years, the outstanding thing is that banks have been putting a lot of money into all kinds of innovative projects. So I wouldn't say that banks are out of the picture, and I would say that whatever problem exists and whatever stopped them from innovating in the past or taking advantage of issues in the past, they're not incapable of overcoming. So I wouldn't say that they're going to disappear. Having said that, a lot of the value that's being added at the moment is at the transaction level and at the level of niche opportunities. So a lot of the e-money opportunities that we have been where either existing payment services are not good enough or they're just completely absent. So prepaid cards have very specific propositions. Online wallets do specific things for consumers that banks don't do or do much more expensively. The future that we were discussing yesterday about the ability of third parties to access transaction data in banks through APIs, that's very exciting. But a lot of these people don't need to come into funds. They don't need the money itself. They just need the data. So the idea, I think, that Isabella was saying about maybe they'll become compliance, the sources of the compliance experts, I think it's a bit more than just that, but maybe they will look after the money and allow a whole host, an ecosystem of people adding value in various different ways, and they of course extract some kind of cost for enabling that to happen. So that's one thing. One thing just to add from the previous question, and that's our timeline is often kind of obscured a little bit by our recent experiences. So if you think back how much the world has changed since the internet, since about 2000, so fast and in so many different ways. From 2000, from the 1950s until 2000, probably the biggest innovation in payments was a credit card. So 50 years maybe, where we got a credit card. From 2000 to today, just enormous changes, enormous changes. The platform, the payment services, the consumer relationships, access to markets. Maybe we don't call it a revolution, but if you look at it not within our own lifetime timescales, it's pretty much a revolution.
Wait, can I point something out? Okay, so evolution, mixture of evolution and revolution, revolution and revolution. I take it revolution. So it's really good because we can fight. We won't.
Please do so.
Yeah.
Yes. About the relationship between banks and fintechs, I think the definition of fintech is one thing that we can discuss for a lot of things, because really technology and bank have been working together for a lot of time. So really it's difficult sometimes to define what is technology that provides to a bank, that could be fintechs, that could be providers, that fintechs that really are trying to get some of the sector. I think the most challenging for me situation for the banks is the fintechs that really are, that the proposal really is to be cheaper and to be really more efficient doing the same thing that is right now offering the bank. Because in that case, that would be similar probably to low-cost airlines, it's very difficult really to compete with that kind of situations, because you have a business that really, that the out of profit that you will be generated in the next years, that you can really don't stop, but you know that the future probably will change. And in that case, really, it's very difficult really to collaborate, and we will see really how this kind of fintech will really push the margin low, and the banks. The only way to collaborate is really to duplicate or to do the same, but it's a change really of a structure. So I think the most challenging for the banks right now is the competitors that really are doing the same but in a more efficient way, because he really damaged the margin of the bank.
Okay. So in this case, do you believe that more banks would take this strategy of spinning off and creating like a specific unit with no problems of legacy system and starting from scratch to say, okay, I am this very big institution and I'm going to be focused on a specific set of clients, but for other set of clients, I'm going to transfer those clients to my own new bank because I have the license, I have capital, and I have the trust. I just need to revamp my technology, and certainly I would not be able to do so with the people I currently have, with the system that I currently have, with the process I currently have. So I need to create something totally new. Do you believe that banks can take this strategy to compete and to remain really relevant to the set of customers that are getting caught by these other fintechs?
Well, I think there were some attempts, and there was an example given in France, BNP Paribas, so one of the largest European bank, who launched Hello Bank, which is a new digital bank, very different and so ever. Initially, they wanted to build from scratch a new bank, really. Because of risk, compliance, internal processes, internal discussions between people. They decided to use, at the end, most of the infrastructure and the processes and all the stuff. So they have a new front end, pure digital bank, but at the end, the back end is still the same. And in most of the banks I've seen that have launched such either new digital banks or that have launched new brandings or so ever, okay, it's more like, okay, front end is brand new and better customer experience and user interface, which is a great stuff. But behind, those are still the same products. Maybe a bit cheaper because they try to position themselves as being a low-cost solution. New solution, low-cost solution for young people, for millennials, for whatever, but behind it, it's still the same. So you take an old car, you take an old car and you put some paint on it and say, okay, this is a brand new one. Okay, when you see it, okay, you can think, okay, it seems to be nice, but when you start using it, you still see it's an old car. And it's a major problem because, not because of banks, not because of financial institutions, it's because of all large organizations have heavy processes. You have a decisional process to follow. It's very complex, so it's not only financial institutions, those are all large organizations that have those difficulties. And the point is not to try to innovate only from the inside, but try to kind of outsource innovation or a big part of innovation to other companies, so in our case Fintech. And if you take the example of Apple, Google, Facebook, Amazon, they are acquiring an amazing amount of startups. So sometimes you hear like, okay, Rakuten buys Viber or Facebook, WhatsApp, and so ever, okay, big numbers. But every day there are acquisitions you will never hear about because they are trying to get ideas from the outside and not from all those corporate processes and decisional processes that are so long, that must exist because those are large companies, but that are so long.
So I believe it would be more interesting for them to adapt their system in a certain way, that it could work more or less as a plug and play to get technology from outside, so they buy a different set of fintechs that are concentrated in different areas, and then it plug to their big mammoth.
For me, that's really one of the best solutions. Depends, of course, on every company. But until innovation is not mature enough in the company, it's difficult to make innovation. You can appoint a chief innovation officer, which is a good thing. But the question is, I always ask is, does Amazon or Apple or Google have a chief innovation officer to bring innovation to their products? They don't, because innovation is a question of culture, and everyone must bring innovation from the inside, from the outside. And so that's why when you're meeting, when I had offices in Silicon Valley, and when I was meeting people from Apple or Google or Samsung or all those guys, I never met a chief innovation officer or a kind of an M&A officer or acquisition officer. I was meeting people from the business, from the specific business, in my case payments. And those guys, if they were interested, they would go to their boss and say, okay, I want to acquire this company. Or I want to partner with them. But they don't try to directly link to the business. The business has to decide what is good for him. And in large banks, in large organizations, too often, at some points, the IT department says, I don't have time for that. And that's why having kind of an open infrastructure, open functional architecture allows to plug and play remains for me the best solution. And it's a long journey to go there, from legacy, 50 years of legacy systems to open stuff. It's a long journey. But while the only advice, I don't give much advice, I ask a lot of questions, but the only advice I usually give is don't make plans on 5 years. Don't say, okay, in 2 years I will implement this fintech and in 3 years this fintech, because I have no clue what will happen in 6 months or 1 year. So we should be able, we see a product that is interesting, 3 months later or 6 months later, it should be in production, it should be used by the clients. And so for that, you need to go for it and don't make any specific developments for this company or this company.
I I think banks are under a lot of pressure right now. So they're under a lot of regulatory pressure for the stuff coming out of the credit crunch, which they're still trying to sort out. So a lot of their resources are going into stuff which isn't about innovation and changing their business. At the same time, there's a lot of startups which are trying to grab a little bits of their business. And there is new technological things like digital ledger and so on, which is occupying them. They're thinking, is this relevant, isn't it? Is this going to destroy what we're doing or not? Is this going to make us irrelevant? In addition to that, at least in Europe, there's also regulatory changes which are trying to impose greater competition on the banks. So on their card-based side, they're being forced to reduce the amount of money that they get from interchange fees. On the ability of consumers to choose a bank account, they're required now to make changing accounts very easy. So there's an actual legal requirement on them to make it very easy for consumers to change accounts if they want to. And then we've got this stuff about kind of consumers being able to make use of transaction data and all that. So banks or bank accounts are becoming commoditized increasingly. They're becoming, I can choose between one and the other. So they're coming under a lot of pressure. So they've got to decide, what is their core business? Is it offering bank accounts? And if it is, how do they add value? They're going to be in the same position as everybody else. They're going to have to come up with ways to add value to the consumer's way of life to make themselves relevant and not commodities. Either that, or they just decide they are commodities and they have to take a slightly different path. I don't know what the answer is, but it's going to be a very interesting few years.
So the original question was if banks will do spin-offs, and then digital-only banks came to the picture, which is very important. And I have three things to say. So the situation is dangerous, Isabella, because it's a Friday afternoon, and I have three things to say. First, all sorts of transactions will happen. Second, banking is an economy of scale. Third, which is, by the way, conclusion of number 1 and 2, watch PayPal. Now, first one, all sorts of transactions will happen because it's an evolutionary market, but a constant evolution. Spin-offs, mergers, acquisitions, hostile takeovers, splits, any sort of transactions will happen, and the transactional market will just gear up. That's my prediction. The second thing, banking is an economy of scale. Ever since 2500 BC, when grain loans started in Assyria, it has been an economy of scale, and in fact, the partial success or the lack of success of digital-only banks, even if backed by giants, but even if not backed by giants, is the lack of economy of scale. Digital-only banks usually grow exponentially for the first 100 or 200,000 clients. But then this exponential growth flips into stagnation, and basically digital-only type of clients, that client segment, as of now, it's very limited in every country, and basically these people are not very loyal. If another digital-only value proposition comes up, they are smart, quick, able, and confident to skip and go to the next one. So basically, after 100,000 or 200,000 clients, usually there is a ping pong between the players. So that was my second point. Many transactions was the first point. Second point was banking is an economy of scale. Anyway. Third point, watch PayPal. And PayPal is very important because when we talk about the future of fintech, PayPal is a great example because PayPal is 10 years ahead. Most fintech companies were established in 2008 or after 2008, the vast majority of fintech companies. But PayPal was established in 1998 in San Jose, in the Silicon Valley. And PayPal first went public in 2002, January 2002, and it was acquired by eBay after going public in June 2002. It was acquired within 5 months after going public for $1.5 billion US, by the way. But, at that time, but the important thing is this, since then, since 2002, tax rules changed in the United States, and now there is a disincentive for acquiring a publicly traded company within the first year of that company going public. Now, eBay spun PayPal off in July 2015. PayPal went public second time after eBay spun it off on the 18th of July 2015. Remember this date, because the 1-year tax disincentive will be over on the 18th or 19th of July 2016. And PayPal, with its 175 million clients from 200 countries, will be an available target to be acquired. And why am I saying this? Because it shows how the transactional market is gonna gear up, and it shows how much economy of scale matters. PayPal could reach economy of scale because it had 10 more years than most fintech companies. And PayPal could reach economy of scale because with these 10 years of advantage, it had time to go to 200 markets, many lawyers, many millions of dollars for many lawyers, and they figured out the regulatory patchwork between countries, and you know, they are a great acquisition target because others know very well that economy of scale is so important. So you can acquire something which is in 200 countries and has 173 million active clients.
Okay. About innovation, I will talk about one question. I like very much the film Back to the Future, and I think we can learn a lot about telecommunication. I was working in Telefonica, I think 8 years ago, and in that time, I think they think that they have to develop a lot of application on top of the mobile. So if in that time we have to choose between contracted developers to develop all the application in my application or to do a marketplace like App Store, I think that the solution will be clear for us because we have we know what is right now, what is App Store and what is Telefonica right now in terms of this kind of application. I think platform will play a very important role. I think innovation has changed, so community developing inside your platform will be crucial in order to add value, and I think it will play a very important role in innovation because of scale also, because really in terms of scale. So I think we are changing the way, if the banks really think that they can develop all the innovation inside, probably they will think as the same as a telecommunication company will think they can develop all the application. So in my point of view, really innovation is outside of the company. It really needs to provide, or the companies of the banks, they want to be a scale, they need to have a community developing on top of that. And I think that has developed that this kind of platforms are really the best, an advantage in innovation for a bank. So for me, that kind of models, we will have probably a fin store. I don't know how to call it, but I think probably it will be the future.
I'd just like to give one concrete example. This is from Ingenico. Ingenico is the largest provider worldwide for payment terminals. So, and as his main competitor is Verifone. And Ingenico has launched last year the first platform for payment terminals where the merchant is able to download some kind of apps. So it's very close from the Apple App Store solution. So it's checked by Ingenico in terms of security, in terms of all stuff. And the merchant just says, okay, I want this mobile payment solution. I want this credit solution. I want this stuff on the payment terminal directly. And downloads automatically. You don't have to make an implementation, to make an update. So they launched it, so first it's in the Eurozone that they started to deploy this solution on the new terminals. But this is typically the way financial institutions or financial provider can bring more value by having collaborative approach and kind of outsourcing application, because in my previous company, so Flashes, when we got integrated with Ingenico, into Ingenico payment terminals, but it took 3 months, which was very fast for them, but for me 3 months as a startup was very, very long. And then in that case, it could be for everyone almost immediately once they check that all security is good and so ever. So this is very concrete example of an open infrastructure solution that you can set up and that is existing today.
So who's going to need payment terminals in the future, though?
Sorry?
Why will people have payment terminals in the future?
So that's a very good question, and that's a very good point, and that's why Ingenico and Verifone are working. The plastic card will disappear. Both Ingenico and Verifone will tell you. Business card, plastic cards, credit card readers, let's say that, are currently their main business. But even for Ingenico, it represents something like, it's still 60% of their business. 40% is now on service, on payment services. Online payment services, partnership with couponing solution, redeeming solutions, and so ever. So the payment terminal might not be anymore, I would say, a credit card reader, but would be kind of a merchant terminal that would be used for the checkout. So maybe not with plastic card, maybe it will be biometric, maybe it will recognize face recognition when you go out, but it will be the merchant will still need the machine anyway, and a trusted one, secured one. And this is where Ingenico and Verifone want to position themselves.
Isabella, you have about 10 to 15 minutes to wrap up, including the Q&As, please.
Okay, I'll stop talking.
So that's great. I mean, just to move forward a little bit in the sectors of fintech, because we talked a lot about banks and how banks would have a relationship with startups. And then you're talking about payments, right? Which are the sectors that you believe that are poised for growth, and why is it so? Which are the areas in the fintech that might grow more? You can start, Alexandre.
I can speak again. I would say RegTech is regulatory technology is a very promising one. Investment fund industry is late compared to retail banking industry, and probably wealth management and asset management. We talked about robo-advisors, but there is so much stuff behind. I mean, robo-advisor is really great, but there are so many stuff behind it to be done.
I think it's going to be machine learning and big data as a way of adding value to payments.
Well, one of the sectors in Spain, I think the fintech in each of the countries, I think, have its particular situation, because some countries have more transactions of one type or more verticals in one type than another. So in Spain right now, I think there is a crowdfunding in real estate. I think 80% of the people in Spain buy a house, not rent. So we have really a culture that we really want to buy a house. And I think sometimes it's difficult to access to some kind of financial products because they are only for big capitals. So to buy a house is really very expensive in Spain, I think, out of places. And it's not possible to buy, I don't know, 100 euros of a house. So I think probably this, the wealth management that probably you add value in that kind of things will be also wealth management and crowdfunding in real estate. Access to that kind of investment will be also a new opportunity.
It's a very good question, but again very dangerous, but now I will hedge the risk. So I have 30 growth subsectors within fintech. You won't hear these 30. I will only list 10, which I think South Korea will be real champion in. Okay, so I won't list the 20, which South Korea will only be good in. I will list the 10, which South Korea will be true champion in. So those 10 subsectors within fintech are phone-related solutions, card substitutes, wallets, crowdfunding, robo-advisors, wearables, digital currencies, back-office blockchain solutions, interbank blockchain solutions, and others. Okay? These 10. There are 20 others, okay? But don't worry about those. In those, South Korea will only be good. But in these 10, I think South Korea will be very good. Excellent.
That's a very interesting thing. I mean, I think you have listed the whole sects and areas of fintech if you achieve the 30 number. But by listening to your list and to what our other panelists have said, I noticed some sectors that were similar. So we talked about robo-advisors. We talked about B2B lending or crowdfunding, right? And then we talked about wallets. So just to play a little bit with that, robo-advisors in many jurisdictions, we've talked a lot about it, but we haven't seen a lot of adoption from the consumer side. So that's the question. Do you believe they're not well positioned because they're trying to do B2C? They should be B2B and try to help institutions with the existing consumers. So that would be the first question regarding robo-advisors. And then when we think about P2P lending, or it has been a sector that has not been very successful in a sense, because many of the companies have done IPOs, they couldn't live to their private valuations, and there have been some scandals due to Ponzi schemes, to a bit of fraud in lending club, and indeed that they have problems to resell their loans. So in these two sectors, there are some specific hurdles. So what do you believe, in spite of those hurdles, they're going to grow? And is there a difference in any geography to this growth?
Okay, so robo-advisors. What I do see is that it's not robo-advisors taking over human advisors, but it's the robo and advisor model. You see? So algorithms can help human advisors to give much better advice. I would call it augmented humanity. You see, a human advisor is augmented by a robo-advisor, and by the way, it's gonna trickle down. This robo and advisor model is gonna penetrate banks from the private banking, family office, high net worth individuals, ultra high net worth individuals segments, because there, in these segments, let's just say private banking, in these segments, each piece of advice has a higher value. You see? So you can install very smart algorithms and bear the costs. You don't have to change human advisors, you can augment them. Now this is gonna trickle down to mass segments. And in mass segments, the algorithm, the robo, will have a little bit bigger role while the human component, more expensive, will have a little bit smaller role. You see, that's my prediction. But this robo and advisor model is gonna spread. The peer-to-peer lending. Go ahead.
Okay. Now, when we talk about robo-advisors, I think we have to differentiate between passive management and active management. I think what probably really changed will be there will be a real talent competition in wealth management. That I think right now is not really. There are a lot of people that are managing funds that really, are not really doing nothing better than in ETF. So really, the industry really has to change, and I think the talent has to emerge. Could be probably algorithmic trading, probably will be people who in social trading can really show that they really are very talented managing. But I think that kind of sector really will emerge the talent between augmented reality, and there will be really, we will have better instruments, better funds, and the funds that really don't add value, that will be distributed because they have a branch and people really cannot access to all the offer. I think they will disappear. So I think we will have better funds in the future, and will be a more transparent offer. I think really in that thing will be people who really go to ETF or passive management. That will be some robo-advisors are really focusing really in asset allocation, or it will be generating alpha. So I think it will be better products, I think, and that will be a mix of innovation.
I think just on robo-advisors, I think we're at the very beginning. I mean, we cannot say, okay, you see it doesn't work, there are not that many customers, for two reasons. First one, that banks have not adopted yet, or not much, robo-advisors. So the B2B2C model is not yet in place, or not seriously in place. For the B2C model, it takes some time, both to educate people and also just to find a way for the communication, to communicate to people. I mean, acquiring customers is difficult. There is no magic trick. You must get one. And amongst the hundreds of companies in fintech, only a few won't succeed to get enough customers and to get that famous exponential growth that comes. Until now, there were no big successes. Okay, you got Nutmeg, Betterment, which are financial successes for the founders, but not real financial successes for the shareholders, or in terms of numbers of clients. And so I think it's mainly a question of time. It's like when I hear about blockchain, those are technologies, those are stuff that we're at the very beginning of. Even if blockchain exists for long because of Bitcoin, but blockchain apart from Bitcoin is really new. There are only a few solutions existing. Same for robo-advisors. There are some solutions that exist that are on the market, only a few, but not very well distributed today.
All right, so just to wrap up, because I think we're going to be running out of time very soon. Just to ask you guys about the state of funding today, because we saw that in many jurisdictions, funding has become a bit more scarce. There have been some disappointing news about certain fintechs and startups in general, in Silicon Valley and other places too. So apparently investors might become a bit more detailed in their due diligence and look at different aspects of the business. Do you believe that today, if you come with a value proposition to say, I can have this exponential growth and I'm going to figure out how to make money afterwards, do you believe this is still valid? Because this was the main proposition of e-commerce, right? And until today, it's very hard to see where they're actually making money. So in terms of fintech, what should be a good value proposition? What are the areas that investors are looking at when investing in these companies?
I think they're looking at not in a specific sector, maybe less in mobile payments, because it's I won't say it's over, but it was a few years ago. So on payments, there are still a lot of stuff to be done. They are looking mainly, so not on a specific domain of fintech, but they are looking at the capability to get this exponential growth, either in B2B, B2C. Well, usually investors don't like much B2C, so they tend to prefer B2B or B2B2C. They don't like that much B2C, but you can still come to an investor with a B2C product if you have a good strategy and if you start to have traction. So I don't think it's more difficult now than it used to be. I think it's even easier now than 4 or 5 years ago. Because 4 or 5 years ago, fintech was not existing. It was mobile payment at that time. And when I arrived in the Silicon Valley, people told me, oh, mobile payment, we lost so much money in the last decade. We don't want to invest anymore. Well, finally, they invested. But when they find a good solution where they can get traction, and traction is not only revenues, traction can be the number of users. Especially in the financial industry, if you have a lot of users, monetization is pretty easy. For a messaging app, you can ask yourself, okay, I have 1 billion users, how do I make money on it? In fintech, payment, or robo-advisor, whatever, you can always cross-sell products very easily. You can always get fees on some transactions or whatever. So there are always some ways to monetize it. And so for me, I'm working a lot with different VCs that are mainly specialized in fintech. Both in Europe and in Silicon Valley, and their point is they have not changed. They are making maybe a bit less deals in the last few months, but it's because they didn't find the right stuff. Because there are a lot of copied solutions, but not that much new solutions that are coming on the market. But for the one that have good solution, a good team, a good potential market, they get funding.
Can we wrap it up in about 3 minutes or less, please? Thank you.
Okay, well, one of the things I see, we have a VC fund that invests in seed capital, we invest in startups, but when you invest in fintech, the first thing is more difficult to invest in seed than in other sector because it's very intensive in terms of capital, so you usually invest not in the earliest stage. That implies that the equation is more difficult because you have to multiply because at final you have a very a low probabilities that you really succeed in a company, and that's in the equation you really need to the multiplier will be high. So the fintech force you to enter in a more not so early stage because they need really be funded well. So it's more difficult. But I think really it would be an important. We are right now trying to make a fintech index like Wall Street or like Dow Jones or S&P, and I think really the fintech index in the future, because that could be an ETF, probably will have a way to invest in this opportunity that I think in the future will be important opportunity.
I just want to make an important point because this is a very important question and the shift is going to happen because in permanent zero rate environment, the name of the game is future growth opportunity. That's the name of the game. In positive interest rate environment, the name of the game is prompt profitability. Now, we will move on a global scale from a permanent zero rate environment to a positive interest rate environment, and that's why attention is gradually shifting from future growth opportunity type of investments to prompt profitability type of investments.
Can we wrap it up?
So we're going to wrap up. So thank you very much for assisting to our panel and to the event in general. And thank you to my panelists. And I think we need to wrap up right now.
Thank you very much.